Today is September 9th. I want to talk about several student loan news updates. One, I want to talk about what the set interest rate for school year 2025 to 2026 looks like. I want to talk about the delinquency update as well as the Department of Ed updates on what they're going to do to create basically an operations manual to improve servicing. I want to share their updates basically by the Department of Ed and the Ombudsman office. Then the third thing I want to talk about are the delinquency rates and what is happening with student loans entering into repayment since the pandemic. So those are the three things this video is going to be about. So I'm Catalina. I'm the CEO and co-founder here of LoanSense. I report mostly on student loans, but I am a house hacker and a mother. I live in the state of Florida. There's a lot of things interesting in the healthcare space happening too, but that's not what my channel's about. So I tend to focus on personal finance, student loan, debt, credit. If you like this sort of content, please like, subscribe, stick around. 91% of our viewers do not subscribe, so we appreciate it. Turn on the bell if you like our updates. So first and foremost, let's talk about the interest rates in this school year. It's really interesting. I hate to say the word interesting because it's a nondescript adjective actually. It's alarmingly high interest rates, okay, for student loans. It's 6.39% for undergrad loans, 7.94% for grad loans, and 8.94% for parent plus loans. Boy, do they do not want parents borrowing. Okay, so that's an insanely high interest rate, 9%, insanely high. I went to undergrad when interest rates were 2%. So it really stacks up the daily interest accrual on people's loans. So not only the one big beautiful bill starting for students who start in school year 2026, not only are interest rates high right now, and I don't project they're going to go down much in 2026, but there are also borrowing caps starting next year for new students. So if you're thinking about going into grad school after undergrad, and let's say you're finished with undergrad and you're thinking about grad school, there are borrowing limits now. And what does a borrowing limit mean? It means that schools are going to have less access to money. That means that a school may have great statistics, have great class sizes, but starting in 2026, that may not be the case because if the government does not lend more money, there's a cap to how much you can borrow, 50 grand for regular grad school. And there's also lifetime limiting. It's a little different for professional school, but schools will start to see reduction in the number of students who can attend if they don't have large endowments to fund the difference. And the number of schools and programs are likely to shrink significantly. So if you're thinking about going into a grad program or starting even an undergrad, like we talked to some parents, just be very mindful. Look to see that the school, when the school is founded, what their endowment looks like. You don't want the school to basically go away at graduation or something, or not be able to finish the program because they can no longer operate. So I just want to put a warning out there. Interest rates are high, but starting next year, there'll be borrowing limits. I wanted to update that right away and talk about that. Now let's move to student loan servicing news and updates. So I had to come to you all with this update because I was reading the Department of Ed website, the Office of Ombudsman. They put out a statement on September 5th saying that they're going to improve consumer education and increase transparency for borrowers, and they're going to develop a centralized common manual for servicing and collection practices so that there's aligned accountability for their servicers as well as more streamlined communication. So that's what they said. They also reported that as of June, 6 million people, which is literally 35% of borrowers, are delinquent on their student loans. Literally, listen, 6 million are in a state of delinquency. Out of the 6, 4 million are like in late stage, which means they're heading towards default, and already 5.3 are delinquent. So that literally comes to projected 10 million people will be in default by the end of the year, which is just crazy. And they're saying it's because of their miscommunication. It's not just borrowers, but their miscommunication, not communicating right timelines on repayment, lack of consistent communication when borrowers call their servicers, And they're saying that they're somehow now it's been 10 years in the making to create this operation systems to better oversee servicers. So they don't tell us exactly when it's going to be rolled out, but apparently they're going to get rid of Biden era punitive practices. I'm not quite sure how that's going to make it better, but apparently they say it's going to make it better. Let's see what that means. Let's see if communication does improve, because at LoanSense, we are seeing borrowers who receive notices 4 times, 4 different due dates for their student loans. So that has to be fixed, because if you don't even know when your student loan is due, how can you be put at fault or your credit is hit when they didn't even communicate the right date? And it's up to you, and then you wait hours on hold to talk to your servicer. So listen, if you work with us, that is not a problem you're going to have, because we communicate everything in writing with your servicer, and we make sure to get things in writing, because whatever they verbally say, it's not in writing. So in order to hold the servicer accountable for their mistakes, everything needs to be in writing. That's our pro tip. So that's the update from the Ombudsman. They said that the Ombudsman's office is not going to expand. They're going to expand not just to take complaints, but now they're going to support better financial literacy and preparedness to understand the responsibilities of paying your loans. It's not going to be focused on forgiveness, but responsibility on paying your loans, and that they need to make sure their communications are better, so that by communicating better, you're now going to learn and understand the responsibilities better. To me, those kind of statements make it very clear that whoever put out this statement and this plan, they're not educators. They don't understand that just because you communicate something, it doesn't lead to, I mean, obviously better communication is key in servicing, but it's not actual financial literacy, right? So let's not confuse the two, which to me, the statement was very confused, that they think communication means that you're now going to have better financial literacy, which let's talk about now. Let's dive to what I talked a little bit about defaults, but let's talk about what's happening. Why are these defaults happening? That's what I said I would end the video with, right? Well, the data is coming out. About 5 years ago, people from undergrad were graduating, coming out with an average around $330 to $370 student loan payments. Now, Gen Z is coming out from undergrad with like $590, so almost $600 payments. And Gen Z is also the generation that has also used much more buy now, pay later products. Okay. What that is for those that don't know, when you go on a website and you're like, buy now, pay later, like you will buy the product now, get it today, but you will make installment payments. Like Gen Z, who is now coming out with almost $600 payments a month on average, are also accumulating all kinds of credit card and buy now, pay later debt, because they're just buying many things that they're paying for overpayments and owe a lot of money. And so not only are you hit with these higher student loan bills, but you're also, hit with all these other payments for products that were sold to you on a payment plan, basically. So it is hard hitting, and Gen Z is coming out not just shocked. It's less shock that they have to make a payment. It's a shock of how much the payment is, and not just how much, but like how long do I have to make this payment? Like the understanding of conceptually, literally, if you're 22 years old, 23 years old, and you're told you need to pay 10 years of this, what you consider a high payment, you're like, that is like half of my life. I don't even understand that, right? Because half of my life, like basically Gen Z has never committed to anything as long as a student loan, and to pay a huge percentage of your income. So basically what's happening is they're enrolling in the highest rates of forbearance we have ever seen. I forget the exact percentage, but I can show you the chart. It's basically like, I'm not screen sharing right now, but an inclined spike on the number of people asking for forbearance. So I think we're actually at about a quarter of borrowers in forbearance. Quarter. And another almost quarter are going into delinquency. So that's literally only 50% of people are paying on their student loans. I always encourage anybody who's trying to manage your student loans to first understand how much interest is accruing daily. That's really, really important, because with high interest rates, interest accrues daily. how do you calculate that? You take your weighted interest rate, rated average. That means if you have many loans, let's say at 6 to 7% or 5 to 7, whatever the interest rate is, you take the weighted average. The weighted average is literally, and if you don't have the weighted average, you could just take, if you don't want to do weighted average, you could just say, what is the largest loan with that's not the most accurate, but your average interest rate if you don't want to take the weighted average. But weighted average is just percentage of your loan at that interest rate. You will add it up and then you'll divide by the amount. Anyways, there's a weighted average formula in Excel. It's very easy to calculate the weighted average, but you want to get the weighted average interest rate that you have times by your balance, and that is the amount of interest you accrue annually, and then you want to divide by 365 days so you get your daily interest rate. And the reason I always encourage people to do that is because if you know just by waking up this morning and breathing in that you owe United States Department of Ed $19 without doing anything. That's like without having a single rent payment, without having a single utility payment, you will have to pay $19 that day in interest. I find it to be either deathly terrifying for some people or motivating, and I hope it's more motivating, but motivating as in like, let me figure out how I'm going to knock this $19 out of my life forever and get motivated to save, right? I mean, $19 is a little extreme. I just use that random number because we've seen it, but let's say it's $10, $9, $5, whatever that is. If I don't drink this $5 cup of coffee, now I pay my interest, right? And actually use it to accelerate your payments. That can help you get out of debt. We never recommend people, go on forbearance for as long as possible. Number one, it's limited. You're limited to being able to go on forbearance for 3 times over the life of your loan. And you have to have a reason. So we recommend it to use it for emergency purposes. Number one. Number two is it's much more preferable to go into an income-driven repayment plan and actually pay a payment that counts towards repayment at an amount that they calculate as affordable to you, even though you might not think it's affordable, but they calculate it as affordable based on a legal formula. We always recommend that over going into forbearance. So if you're overwhelmed by student loan debt, just know that we are here to not just listen to you, understand your goals, understand your concerns, understand your situation. If you're going to get married, you have a family, etc. What can be done to better manage the stress and the weight of the student loan so that you can stay in positive standing and be able to get to the end of repayment, whatever that pathway is for you. Is it going towards loan forgiveness? Is it refinancing a portion of it? What is it? Is it trying to figure out how you can reduce the payment now to afford a home, but you'll accelerate it after? Is it you're getting married, so you need to file your taxes separate if your spouse doesn't have student loans? Like, what is the plan to manage your payments and get to the end goals you hope to achieve? I hope this video was helpful. We are here on standby. You can get an absolutely free plan at myloansense.com. If you find this information useful, please like, subscribe, and we cannot wait to see you in the next.